I just
All
gave up.
right. It looks like we have just about got everything set up here. I see people starting to join us on LinkedIn. So I'll give that just a few seconds for people to join us over there. And we have all of our panelists ready to go. So thank you so much to everyone who is joining in today for our webinar on FinTech. I'm Tricia Meyer. I'm the Executive Director of the Performance Marketing Association, and I know absolutely nothing about FinTech whatsoever, including really even what it is besides what Gemini told me. So we're all going to learn a lot together. Those of us who are on LinkedIn and me, we're going to learn a lot together today. So um, as all of our panelists are introducing themselves, I would really appreciate it if those of you who are watching on LinkedIn could introduce yourselves as well and just give us a little bit of an indication of what you're doing here today. Are you already working in FinTech? Which side are you on, publisher side or on brand side? Is this something new that you're trying to learn brand new things today? Also, throughout our conversation, while I have some questions that I would like the panelists to get to, if you have questions for them, feel free to drop those into the LinkedIn comments and we'll see how many of those we could get worked in. So let's kick things off. First of all, I want to thank CJ for sponsoring this for us. We've been putting together a lot of great content from the PMA through the webinars and white papers and things that we do. And we could not do that without funding from our generous sponsors like CJ, who is also one of our PMA industry champions. So with that, we'll just go straight to Christopher.
Thank you so much, Tricia. And thank you so much for having me on today to talk about one of my nerd favorite topics, compliance. So I sit on the executive team here at CJ. I GM the finance vertical. I've been at CJ for about 5.5 years. And before this, I was at American Express, and before that, JP Morgan, and before that, the insurance space. I've had securities licensure and insurance licensure. So I'm, again, just a super nerd for the space and excited to talk about compliance and unpack what it is.
That's perfect. It sounds like you actually will be able to kind of help explain fintech. Sounds like so. That's fantastic. Next, I want to jump to Jessica because this is kind of her fault that we're all here, and that is because at Affiliate Summit East last year, I believe, she came up to the table. We were talking PMA stuff. She said, "Why does the PMA do stuff on fintech?" I said, "Because we don't know anything about fintech." And she said, "Well, let's change that. What can we do?" So I said, "Let's try for a webinar." And it took us this long to really be able to find like the experts to come up with exactly what we want to talk about and how we do this. So thank you, Jessica, for putting this out there for the PMA as something that we need to do. And I'll allow you to introduce yourself.
Yeah, and thanks for organizing it. I realized that I just bugged you to do it and didn't organize it myself. So thank you for putting it together. But I'm Jessica Robinson. So I'm the founder of Affiliate Marketing Partners. We go by AMP, and we are an affiliate agency specialized in the finance and fintech space. So we can certainly talk all things fintech. I've been in the affiliate space for about 15 years. And prior to starting this agency, I was the global head of affiliates at PayPal. So running their B2B and their B2C finance programs globally.
Thank you so much. And from our compliance council, Gayla.
I'm Gayla Huber. I am the president of IntegriShield. We're a compliance monitor. We're in just about every consumer-facing vertical that's out there and in almost every country. Um, but FinTech, we've been doing it since 2016, and it's sort of one of our biggest sectors that we do. So, for obvious reasons, a lot of compliance.
Absolutely. And finally, Jeannine, our Jill of all trades, board of directors, council member, everywhere in the PMA.
I've been around for a long time. This is my 27th year in affiliate marketing, so I've seen a lot, including watching, how fintech has become a favorite when it comes to compliance of government agencies that I don't think need to be named, alphabet agencies, I guess. But currently I am the owner and founder of Sled Consulting. So I started that a couple of years ago. Prior to that, I spent 13 years at AWIN, and I've been involved in like every vertical. And FinTech is one of them that came up along the way. So Christopher, Gayla, Jessica all know this. I've spoken at CardCon and places like that, and FinCon. So, it's definitely a hot area, and I'm very excited to be here.
All right. Thank you so much. So let's just start at the basics because I didn't even know how to capitalize fintech when I was trying to put all this together. That's how little I know about it. Capital F, capital T, little t. I didn't even know. And what's the difference between all these different sort of similar words? So let's just talk about when we talk about fintech FinServ, finance, all of these things within the performance marketing space. What all does that encompass? Jessica.
Yeah, so it's kind of like the terminology in the affiliate space where we have different names for very much the same thing. I kind of bucketed into all things finance related. And this is a sector that's been in the affiliate space for a very long time, but it's definitely exploded over the last couple of years. So if you think about like some of the largest finance publishers in this space. I mean, like the Nerd Wallets, the Red Ventures, Forbes Advisor, they were all built off of the relationships with affiliate relationships, I should say, with really large brands like Crystal No, Amex, right? Chase, Discover. They've been in the space for a long time and they've been, successfully spending a lot of money because it's an efficient marketing sector for them. But when I think about this vertical, I really bucket it into three different areas. So the first area I would consider like the brands that are focused more on the lower income or subprime audience. So those are products that are, maybe credit building apps, personal loans, buy now, pay later, debt resolution, EWA. These are all brands and products that are geared towards helping people really take control of their finances. Maybe they're in a tough spot and they need some additional help. So, those are the products that kind of serve that audience. And then we're looking more towards like the mid to higher income audience. So the types of advertisers that we see in the space that are targeting that audience are, your banking products, your high yield savings accounts, more prime credit cards, investing apps, crypto, wealth management, even alternative investing. One time we had a brand that was targeting accredited investors, which is somebody that has a net worth of $1 million or more without their primary residence. So that's a niche audience to be in this space, right? And then the third sector I would say is really like business, and so those are the financial products that are targeting small to mid-sized businesses. Think your B2B loans, payroll and HR tech, corporate cards. And this works really well in the affiliate space too, because we see small to medium-sized businesses actually interact online very similarly to a consumer. So they're going to a lot of same places when they're trying to figure out the product that's right for them. They're going to the content sites to get their information. They're going to the comparison sites, and it's very much a similar ecosystem to what we see for consumers. So it's really all encompassing. I hope that helped explain that.
I think that's great. I would just amplify, just throw a couple more things in those buckets. Maybe it's your second bucket. I think tax preparation services, and some of the sort of like the APIs that you see to support individual consumers like Plaid, which are tracking across multiple FinServ platforms. Again, probably in your bucket number two. Then just taking like kind of a half step back, I think because one of the reasons we're also excited to be in this space right now, Tricia, is because for many decades it was a relatively non-innovative space, if I'm just being honest, like banking and credit card. It was all pretty traditional for decades and decades and decades. It looked very similar. And then in the last 5 to 10 years, it's gotten so exciting. I mean, we're all talking about AI and large language models. And of course, that's going to come up later in this discussion. That's one piece that's really dynamically impacted the affiliate space. But I think it has also created this enormous amount of opportunity in the financial services, FinTech, InsurTech. Insurance also very much falls for me under the large umbrella of financial services. All of that, the barriers to entry have been dynamically lowered. So those thresholds, those speed bumps to even get into the space, whether you're a publisher or an advertiser, are so much lower now than ever before that you're seeing a tremendous engagement. Everyone talks about the consolidation that's happening on the macro level for big banks, but it is also simultaneously at the bottom side allowing more entrance into the space. And so the last thing I'll just sort of, I don't know if it's really a category, but it's like an emerging opportunity zone. And it is that because of that greater accessibility to get into the space, I can imagine a future now where you have big brands utterly unrelated to financial services today who may then develop their own financial services platform or co-branded credit card or an ecosphere that allows to sort of capture that market and sort of be like embedded, what we call embedded finance. I don't want to get too nerdy with these terms, but it's an emergent space that I think really allows, again, non-financial services, traditional brands to engage in the space and feel safe because the compliance guardrails, ostensibly what we're here to talk about today, there's never been more technology to keep you safe. And also just taking one further half step back, just talking about what compliance is. Compliance, in my mind, because I think we'll all possibly have slightly different definitions of it, it's that sort of procedure, those systems, those technologies that help to keep on a Venn diagram three different groups safe. And that's the customer. That has to be first and foremost, always keeping the customer safe, making sure they understand the sort of the definitions of a product or what they're getting for their money. We want to keep the brand safe. So the advertiser, the credit card issuer, the bank, the insurance company. And then at the top there, I think about the publishers themselves. Publishers don't want to make mistakes. They don't want to incur regulatory fines. So part of all of our systems and our operations and our technology working together is to keep all three of those groups very safe as we sort of enter into this new opportunity zone of insurtech and credit card operations and emergent fintech. I want to put a bunch of different words together and just make some glob word of it all together, because there's so many different acronyms and explanations for it all, but it's all very, very emergent right now and very nascent, which is a strange thing to say about banks that have been around for centuries.
Right. Well, so it sounds like, all of you have been kind of doing this for quite a while, and you're talking about how we have a lot that's emerging. So as I was trying to do, just a little bit of research into like how big is this in our industry, obviously through our PMA reports, we've started seeing an increase in the numbers over the last few reports that we've done. But according to another report, which I don't remember where I found it, but it was a 2025 report that was fairly legit to me when I researched it. They said that the affiliate channel now accounts for up to 40% of net new accounts for some of the world's leading fintech brands. So why is our channel all of a sudden, outperforming traditional paid search and social in terms of quality, customer lifetime value, things like that?
I'll jump on that one, Tricia, as well. I think, the first thing in my mind goes to is trust. I think that a lot of banks and credit card issuers and the like have confused a couple of key stats. There's a lot of stats out there that suggest that consumers trust their banks to keep their transactions safe or to keep their money safe. And it's like, somewhere between 77 and 87% really have that level of trust. And I think a lot of the issuers sort of like, if I'm being honest, kind of rest on their laurels about that because they're like, oh, they trust us. Like we must be doing a good job. But when you look at the emotional trust dynamic, I think that a lot of consumers, probably in the 20 something range, 23, 25%, that's how many really trust their credit card companies. And so there's an emotional disconnect. And this is the wrong time to have that emotional disconnect. As we've got this emergent generation of Zoomers, Gen Z, trust is one of the most important things for them. They're very entrepreneurial. They're very business minded. They have the highest, fastest financial literacy in human history. Now is the wrong time to not be engaging with them on the trust front. So while that's precariously low, you've also got just this growing consultative dynamic especially within the affiliate space of consumers, where they're really looking for that third-party validation. They don't trust the brands as much to talk about themselves. They want to hear about it from the affiliates, from influencers, from those large language models. It's also just an increasingly fractured customer journey. And so all of that aligns really nicely with affiliate marketing because of our data-centric core, which drives acquisitions at scale, balanced against often very specific goals and KPIs. And many advertisers are seeing higher and or more predictable LTV, lifetime value dynamics within affiliate now, because these audiences are eyes wide open, which is the opposite of prior perceptions. And underpinning it all is compliance tech really mitigates the anxiety around regulatory guardrails. It keeps, as I said before, the customer, the brands, the advertisers, all of them safe. And I mean, I could talk your ear off about, decentralized finance and artificial intelligence and LLMs and card linked offers and the future, but just keeping it all really focused on compliance for the purposes of this conversation. I think that there's never been a greater opportunity to engage in this space. And I think all those advertisers are being a little bit more honest about the customers that come through this channel. They are again coming through with eyes wide open and ready to engage and potentially be really long-term customers and anchor that trust.
And just to piggyback on that, you mentioned a couple of things in there. I mean, the LTV metric for sure, but I think beyond just looking at LTV, it's also the LTV to CAC ratio, right? Because it's a predictable spend a lot of the time with our partners. And when we are driving those like high quality conversions through this channel, often our CAC is going to be much lower than those like top of the funnel marketing channels, right? So we
Sure.
really have a pretty attractive LTV to CAC ratio. And then beyond that, with the trust issue, I mean, it's definitely again, I'll say it again, it's not an impulse buy, right? Like a financial product is not an impulse buy. This is like a highly considered journey for consumers. So where do affiliates show up? Affiliates are the ones that are often cited sources in LLM models. They have this long form, like deeply editorial content. They have, comparison sites where you can really stack rank against different products that are in the market. But then even beyond that, I mean, content and comparison in the affiliate space is kind of like the coupon and deal of e-commerce, right? Like those are standard, those are baseline, right? For a lot of programs. But then there's the partnerships beyond that. So especially in finance, most fintechs can't be the one-stop shop for all financial needs for a consumer, right? It's too much to build. So what we're seeing is a lot of cross promotion. So like especially non-competitive products, right? So you'll often
Yeah.
see budgeting apps promoting credit building apps and things like that. So like a really great example of just like literally the dream marketing campaign, right? Getting the right message out there to the right person at the right time. So an example would be somebody goes through a personal loan flow and they don't qualify for that personal loan with that provider. Well, what we see a lot of these folks do is they have a decline flow, which not only monetizes that decline flow for the loan provider, but it also helps the consumer get to where they eventually need to be, right? So, okay, this loan provider can't help you, but here is somebody that maybe has a higher risk tolerance, or maybe a debt settlement company that can help you out, or maybe a credit building product that can help you out. That'll all help you in your financial journey. So you can still help that consumer. The advertiser can still make more money, and it all happens in this affiliate environment because it's all on this, pay per performance basis.
We've had like the number of viewers double since I mentioned this before. So those of you who are watching who missed it, please introduce yourselves and feel free to drop the questions in there, and I will relay them over to our panelists as we're able. So a couple of months ago, the PMA actually did a B2B only webinar where we did just completely focus on B2B. So I'm going to ask you one of the questions that they talked about a lot, and that was that as FinTech is spanning consumer apps and B2B with the sales cycle being so much longer, usually 6 months or more. In FinTech, how are you restructuring payments? Are you moving towards paying for the leads? Are you paying for final accounts? How are you dealing with that?
Yeah, so sorry to be hogging this in the
Hey,
beginning.
it was all your idea. We're here because of you, so feel free to talk.
This is the key differentiator, in my opinion, of managing a finance program versus managing maybe an affiliate program in some other verticals. You are almost never in a finance program paying on a revenue driving event. Or if you are paying on a revenue driving event, it is not revenue positive at the time of conversion. And that's because that's just what the sales cycle looks like, right? So, like the most common conversion points in the finance space are things like a lead or an application submit or even an application approved, but that doesn't mean that that customer is, an actual paying customer. So what we normally look at is the waterfall beyond that. We work really closely with our clients to get access to some of that back end data so that we can look to see, okay, are the initial signals of the customer activity is that on par or better or worse than what you're seeing through other channels, and how can we optimize that back? And I will say in some instances when you are paying on a revenue driving event, your payment is normally more than what the customer is paying you. So what does that look like in a real world scenario, right? So say you have a finance product that has a monthly subscription. In order to be competitive on some of these affiliate sites, your payout to the affiliate will be at a minimum 1.5 times that monthly cost, because it's a really competitive space. You have a lot of brands that are vying for that top position, that are vying for that placement. So you typically pay beyond that. So we really need to rely on the data of, like, are the people that we're getting in, are they sticking around? Are they sticking around for 2, 3, 6, 12 months or more? Is this a quality customer? So it's a lot of matching back to the advertiser's back end. And a lot of times we're looking at, you mentioned 6 months. We have some clients that are on a 3 to 5 year payback schedule when they look at their marketing. It's a pretty long journey. And that's why some things don't really work in the finance space. Like incentivized offers sometimes work, but are really risky, especially for a new product reaching out, because you're incentivizing people for that upfront metric and not, trying to find the right product for that customer. So it is like a very data heavy piece of what we do. But, like I mentioned, we're often seeing our LTV to CAC ratio outperforming other channels. So if the data lines up, like, you can really scale a program in the finance space.
Anyone else have any experience with that they want to throw in?
Am
Right,
I the only
we're
one
gonna
out here in Excel all the time? Am I doing something wrong?
Only you.
Yeah.
Only you,
That
Jessica.
used
Thank
to be
you.
my job, no longer.
well, we're going to. Oh, go ahead, Christopher.
I just wanted to amplify sort of as you're talking about the LTV to CAC ratio. So it's not exactly on the point of this question, but I just wanted to say, just to amplify, I feel like having come from a FinServ advertiser myself, from a couple of big ones, without tipping my hat too much there, I think that there has also been a little bit of a struggle to fully calculate the LTV for FinServ products as it relates to the affiliate space. And I think it actually, the coagulation, the assemblage of that data over time really started to come together about, I'm going to say, 8 to 10 years ago. In my view, this is just my opinion. I'm not a lawyer. I'm not representing any brands right now. I'm just saying, I think as the understanding of how to sort of weight the different pieces that factor into LTV coming together at that time period, we've now had a decade go by, and a lot of those financial services brands have now realized, oh my goodness, it wasn't just coupons and loyalty and rewards, which is a very valuable sector of the affiliate space. It's actually folks who, again, I keep saying this, but who were eyes wide open when they came into our brand. They came in the front door, and because they were open, eyes wide open, they stayed. This is exactly what they were looking for. But it takes a long time to really push through the machinery of LTV so that your look back window isn't just 6, 12, 18 months, which I know is sometimes some of the decisioning window maybe on CPAs, but the actual LTV is a much longer, broader time frame. And so I just kind of wanted to call that out because I think that's key to that your prior question, Tricia, about does it seem like 40% of acquisitions now coming through this channel? It's not out of the blue, and it took a long time to get here because that modeling really took a significant period of time to like go through the scrutiny necessary to determine that, oh my goodness, this channel is actually bringing us really valuable consumers.
This makes all of you as experts very valuable in this channel because any brands that are looking and trying to get into this, they don't have all of that history. So they need people like you who can say, yeah, we've worked with other brands. This is what we've seen. This is kind of how to build this model. So hopefully they're all following all of you. So let's move into something completely different in fintech, and let's talk about compliance, which we have an entire council in the PMA that does nothing but compliance, but everybody on that council deals with some different little type of compliance because there's so much compliance in our industry. But one of the things that seems to always come up is, yeah, but not as much as there is in the financial side. So let's talk about that. Since Gayla, you're from our compliance council, and that's kind of your main thing. You want to kind of kick off how, like from the start, how are we embedding compliance, like from the very start, the onboarding of working through a program like this?
Yeah, and Christopher, I think you'll actually, I know you're going to probably be on this one too. He'll probably have some more insight since he's onboarding like on the publisher side. But for us, as like a compliance monitoring company, so strictly kind of looking at it from that perspective, most of our fintech clients, they do have a really strict onboarding process. But I will say there are two categories, and I'm not even sure I should be saying it because I don't love one of the categories. But there's the category where we're going to look at everything before someone is onboarded. We're going to look at like their social. We're going to look at like where everything's coming in, previous campaigns that they've run, all of that. I do know in the subprime space that there is a different category there where sometimes you cannot get visibility into that. So at that point, when you're onboarding, at least from my perspective, for more sort of the marketing side, um, at that point, you are going to have to like just turn them on as a test, but you're going to have to get them like a really low budget. You're going to have to look and try to see what they've been sending in. I think there's a lot today of like fraud that still gets in that first week or two. So they're having to be shut off right away. But really, sort of the main thing is if you can put any process in place to kind of see what those folks are doing prior. I know, like, I've had clients who have not done that, and then they have fire drills, constant fire drills on having to take a publisher down, put somebody else in that place, and like it's just nonstop. And I know that the account teams really need to be focusing on other things other than compliance. So if the compliance teams or whatever, if you use an outside party, whatever, making sure that you do that onboarding with looking at previous behavior, I think that's a really good start.
I think that's fantastic, Gail. And I would say that compliance isn't a nice to have. It's really the cost of doing business. It's the cost of entry. And it's also table stakes. In a funny twist, I feel like it has also become like your ability to deliver excellent compliance. And tell me if you agree with this, but I think that it's also become a competitive distinguisher. Like it's almost a sale point. Whereas before it was just like this thing that we kind of had to do. Now I feel like advertisers as they come to the table, even as publishers come to work with CJ, they want to understand what services we provide to help keep them all safe. Everyone wants to play safe. Again, no one wants to go afoul of any regulatory body and incur any sort of dynamic penalties. So I would amplify just a couple of things. I love what you said. I think it's that process, and it's education, education, education. It's making sure that everyone understands what the rules of the road are. I think I can talk about some specific things. We want to make sure that there's like a staging server review where we can really look at what creators and partners are doing on the creative front to make sure that we're reviewing it, making sure that it abides by some of the brand directions. We would definitely want to pre-vet that. Um, the the communication piece, I think everyone says communication's got to be clear, but I mean it's got to be laser sharp. Clear explanations of the partnership rules, what the terms are exactly, and an understanding that compliance isn't a one-time gate. That's another thing I would say, Tricia. It's once you're live, people think like, oh, okay, now we can relax. I would say good compliance teams are always, reviewing quarterly, monthly, whatever that sort of cadence is, to make sure that partner content, it is maintaining, sort of those guardrails. There's all kinds of reasons why content can sometimes slip after it's gone live. But it's whether it's set up with automated alerts for violations or just manual audit review processes. We have an enormous amount of technology and just kind of a constant investment in that space. I think also when you're working with partners in this on this front, you want to make sure, because new technologies, new third party Opportunities are coming out all the time. You want to make sure that you're always looking at your web of compliance to ensure that it's meeting sort of latest evolutionary sort of needs. Because as we see AI and LLMs sort of like creating this huge renaissance opportunity, it also means that there's probably some evolution there on that from a tracking perspective to, again, just to keep everybody safe and protected.
Can I just
One more thing I would also say, clear consequences. I didn't say that. I wanted to make sure. I think everyone who engages in the space needs to understand what the consequences are if they make a mistake. Sometimes I think in the past, I've seen situations where consequences weren't clearly communicated, so they didn't understand how high the stakes were. And so when we do that at the outset, that naturally sort of forms a relationship where everyone's more incentivized to get those guardrails and those processes set up.
Yeah, and we tend to see like a third strike and you're out is a very common one, but not
Yeah.
always the best for every company. Sometimes it's a one and done. Like we have very large companies where you mess up one time and you're out. So, you know,
Same.
when someone's onboarding, I'm not sure that's the best policy because education, like he said, like is key to even to the point where like when you say education, I think of education as when you're remediating with folks, like we literally have to say in this picture, do not
Yeah.
like it is so much education when it comes to explaining to people the nuances of what to do and not do, because they really do try to kind of ride the line and get around it a little bit. And sometimes they succeed and sometimes they don't.
I try to keep my glass half full, so I try to think of them as we just have to fill up their cup with knowledge, so that they understand if you mess this up, it's not going to work out for you. Um, so I agree with you though. It's just as long as we've got that deep alignment, and it's also about trust, right? We want to, because a lot of times we're sort of facilitating relationships. We're getting the advertiser comfortable with the publisher, so we need that publisher to understand you have got to stay in this lane, and if you don't, whether it's one strike or three strikes and you're out, if you break this, if you cross the line, this is going to have a consequence for you, both monetary and otherwise. It will also impact us. It'll impact them. We all have skin in the game, and let's all just do good. Let's all just succeed and help people.
And I think the one thing I would add, because I agree with everything that you guys both said, but quality over quantity in a finance program, right? Like, you'll see a lot of other programs that'll have several hundred or thousands. I'd much rather have like 50 solid affiliates, right? I mean, hopefully we can scale to more, but like there are these processes in place. So you definitely going for not everybody gets in, right? Quality over quantity, big time.
Hopefully, we have some publishers that are going to be watching this video. They're going to say, yes, I'm ready to get in this space. I'm ready. I'm ready to do what it takes. Come find me, Jessica.
Because we're here, we've got you. We're going to keep you safe. We're going to help
Right.
you do the right thing. When you're working with me and Gayla and Jeannine and Tricia, you're going to be set up for success. You want us, we are on your side, and I think that's also a little bit of a mind shift for them. They think of us as like I don't know, the referees or maybe more the police in a way. Like I feel like there's like a darker sort of a heavier sort of thing. Like we want you to succeed. We're more like a coach. We want to help you win. And I think that's the proper way to kind of engage with all of us.
I agree, even for me. So I'm considered the police, but I try to tell my brands and have them sort of disseminate that information to everyone they're working with that while I'm the police, I'm the good cop because the FTC and other folks are the bad cops. So like you want me to find it and help you get it fixed. So like we want the revenue to keep on coming in. We want you to stay up
We
there.
go.
But just like, so like there's good cop, bad cop, and like try to get caught by the good cops.
And see, I've tried to do stuff a little bit differently than you guys have because, and it was probably the nature of being someplace like AWIN with, tens of thousands of affiliates or whatever, and finding kind of different ones because honestly, those really big affiliates are pretty much owned by one company or another and not necessarily somebody that I could bring in. So what I did was try to figure out how we could make it work for long tail affiliates. For the little guys who may only generate, 2 or 3 applications, maybe a month, maybe a quarter, but, good quality ones where people are
Quality
serious.
still, as Jessica mentioned, still the quality. Yeah.
Yeah, and be able to do that and kind of guide them through it and make it so simple that they can't mess it up, where like it says right on the banner ad that they're posting their affiliate disclosure, we may earn a commission, that kind of thing, and try and do that. Just because there's a lot of long tail opportunities that can be there as well if you manage them properly, um, for people that you might never have thought of. But I mean, long tail to me, there's so much potential there that sometimes gets ignored. And that's my favorite place to go fishing.
I endorse that message.
I mean, I've done that. I did that once in insurance when I was actually working for an insurance leads company. And they were trying to figure out what I was doing because I was getting all these leads and I wasn't doing what everybody else was doing.
Yeah.
So sometimes you kind of have to find that little niche that's in there that does exist, but is also manageable. So it's kind of
innovation
balance because we all know the FTC, they come looking for you. You got to do it right. I actually literally once had the FTC come into my office and like take a look at all of my files to make sure that we were compliant. They will do that. So, it's a little more electronic now than it was in the Stone Age. But that's an example. They will do that. So you've got to make things right, but you can, even with the little guys.
Well, we mentioned the bad cop, the FTC, and the other global regulators. So they are getting stricter, in part because of technology. So they're able to find these things a lot easier than what they used to be able to. So they're getting stricter about where disclosures sit. We talk a lot about disclosure in general in the PMA and just the FTC disclosure requirements. But let's talk about it specifically with FinTech and how you deal with it. And especially in video content, when you have places like Reels and you have TikTok, what are some of these kind of unbreakable rules that you share with those creators?
I would say the most important thing to just keep in mind is that regulators aren't slowing down. I think that there's a perception that maybe there is kind of a pullback there, but that's not happening in this space. If anything, I think enforcement is, in my view, accelerating, especially around short form video, to your point. And the rules you give to creators need to be simple, they need to be memorable, and non-negotiable. You want them to be clear, and you want to make sure that you've set up training for them. I think we've heard already in this discussion, like, for a lot of people entering the space, and if you're being creative and capturing those long tail publishers, like, Jeannine's talking about, you want to, that training is just absolutely crucial for them to understand what those guardrails are. To Jeannine's point, you absolutely can. You can. It's all learnable. It's all doable. And again, when you've got coaches and good cops like us on this call to support you, you can really achieve that. I have a few unbreakable rules. I think first, that disclosure must appear before or at the point of endorsement, not buried at the end of a caption or video description. So if the recommendation is happening at 15 seconds in, then the disclosure must be visible by 15 seconds in. Number two, on video, like, Reels or TikTok or YouTube Shorts, the disclosure must be spoken and displayed on screen. And the text overlay alone is not sufficient if it disappears in 2 seconds. Number three, I would say the ad, the number symbol ad hashtag must be the first hashtag, not buried among 15 others. The FTC guidance is very clear on this. It must be unavoidable and not discoverable. Number four, I would say platform native disclosure tools, are encouraged, but do not replace the need for clear in-content disclosure. And then finally, I'd say financial specific claims require additional disclosures beyond, the ad. If a creator mentions APY or rates or returns, the regulatory fine print must accompany the claim. And then just kind of on a global note, the UK's, ASA or EU regulators, and Australia, I think, has the ACCC. They all have similar or stricter standards. So, if you're working with a global brand and you're posting internationally, you must default to the strictest standard globally. Those are mine unbreakables.
I'll weigh in. I was going to answer this question, and then I started looking at all the policies that I thought were unbreakable, and it's too many to list today. So, um, yeah, I mean, there's just too many, and like there's so many little variances that can happen. So, kind of going back to education, if someone like a publisher is new, or you have influencers who the influencers are really screwing up today, um, those folks, like it's just better for them, I think, initially to stay away from some like mentioning an API or something like that. It's just a better initially until they're sort of educated on what they're supposed to do. So you could definitely have some stricter rules initially for those folks, but and all the ones that you said, those are all unbreakable. Those are all unbreakable for me too. I just know there's a lot of variances depending on the product that is being
Fair.
offered. And since FinTech is now so broad and it can be really anything, um, it really depends, social media, email, websites. I guess my one big, like, if you don't know, at a minimum, make sure disclosures, the full disclosures are one click away. So that's kind of like a piece of info I give my clients. Whereas if you don't know what you should be doing, let's start with nothing gets, between one click away. Um, but ideally it would be in the social media and the video and post. So,
It's all learnable though, right? Like
oh
it is
yeah.
all manageable, and both for the advertiser and for the for the content producer. Like it's all doable. I just feel like I keep wanting to insert that and letting people know that we're here. All of us are here to support in that function, because I think that it's been very intimidating for a lot of brands just because of all the reasons you just said, Gayla. Like there's so many things that can go wrong and that frequently you and I see do go wrong, but we also can catch it, fix it, modulate it, and absolutely abide by those guardrails. And I think that we're doing a better and better and better job over time of ensuring all those protections in place. And now we're seeing lots of financial services brands engaging in influencer campaigns and short form video content, and I think they're quite successful.
Yeah, but
Yeah. And oh, go ahead.
Okay, I'll just jump in real fast. But I think like the one piece that we see a lot, especially with our brands that are in really highly regulated spaces, is just upfront review, right? Like it's just a part of the process. Before anything goes live, their team has their eyes on it. Their legal team has their eyes on it. At PayPal, our bank's legal team had to have our eyes on it. Now, did that slow the process down? Yes, 100%. But, I'd rather it take a couple weeks longer than, have some risk going out the door. So there is like just a different launch process in the finance space because there are some of these added layers, right? And that also removes some of the, well, did I follow all the rules, right? Well, we'll tell you, right? We're taking a look at it, right? If you didn't follow the rules correctly, then here's our recommendation on how to change it. Nothing different about, especially when it comes to editorial content, right? We're not changing your opinions, but you legally can't say this.
Yeah, one thing I just wanted to throw in before we left the FTC question. So I don't know that this is common knowledge, but a little birdie told me, so I think I'm allowed to say it. But the NAD, which we all know for other verticals, is looking to get into the fintech space. So we will also now be looking at making sure like we don't get flagged by the NAD. So there'll be even more eyes out there moving forward.
Here's a little hint. If Gayla ever says a little birdie told her, what she's saying is something that everybody's going to know eventually, and you heard it here first.
Breaking
Because
news.
Gayla
Thank
knows
you,
it
Gayla.
all. Yeah, Gayla knows it all before everybody else. So when Gayla says something like this, it's like when E.F. Hetton talks, everybody listens.
Yeah, hopefully
That's
I was
Gayla.
allowed
That's
to
what
say that, but okay. I said it, it's out there. I do think people should know though, because it's one thing to have the FTC, which we all know they have less access to the technology. So that's like a little boon in your favor because you have a few days to find things, fix things. things. Yeah, NAD, they have,
Which it makes sense. It makes sense that they would.
competitors turn each other in all the time. And so like
Right.
it becomes kind of a thing. So yeah, just a heads up that we might have another set of eyes on us.
Well, as we're kind of talking about the bad things that happen, and we had some comments from the people on LinkedIn kind of talking about the agreements that we're putting in place, while we're onboarding in advance. Let's talk about, when a partner does something that's unethical or even worse, maybe illegal, there's the reputational risk to a bank, to a fintech company. This is massive. So, what are some of the things that, triggers that absolutely should be included in these agreements?
Okay, I volunteered to answer this. I'm not an attorney, nor am I a fintech or a publisher, but um, I do monitor for things that are in some of those contracts. So I'm just going to kind of go through the list of things that we do. Um, so the anti-money laundering. So we're always looking at that and those lists. OFAC sanctions. That is one that's really big right now. Really, any merchant that's out there that's using any sort of processing, they're going to be looked at for OFAC sanctions. That has to be looked at every day. The anti-bribery, anti-corruption, that's an obvious one. Having in the contract for financial crimes by the partner or its providers. I know that's in a lot of the contracts and they will get that during onboarding. So like when we're looking at all these places for information, the company names, the parent company names, all of the sort of ownership, everyone in that group gets looked at when it comes to like looking at OFAC and things like that. Um, and then also following sponsor bank policies. I know like that's an obvious, should be obvious. That one's been around forever, but following the sponsor bank policies is usually in the contracts. Regulatory actions, we look at that as well. And then one step further, a lot of folks in the fintech space have us look at BBB and CFPB like complaints. And that's like usually
That's
on a
great.
monthly basis. So OFAC is more of like a daily because you need to make sure you're looking at anything that's owned and any of the owners on that list. But then the BBB and the CFPB tends to be like a more of a monthly or a quarterly look. Monthly is usually better just because you never know when a bad complaint can come up. And something I wanted to say earlier that kind of fits in with that CFPB complaint stuff and the BBB stuff. I think you were earlier, Christopher, when you were talking about trust. I wanted to throw in that, like in the fintech space, so we do lots of consumer facing verticals and we do studies on all the different verticals. The fintech space is the number one vertical to have fraud. And so, obviously, for obvious reasons, money. But there are so many fintechs really any company touching that space where there are trademark infringements, where the actual violations occurring and the fraud occurring are completely, they're like not the real company. It's just happening and it's happening globally. But what we'll find is a lot of those BBB complaints and CFPB, a lot of those tie back to the fraud we find and not the actual brand. And so that's another thing when you're monitoring. It's not always what you know is out there and the review of like the marketing going out. Sometimes it's what is happening to your brand that you don't know about. And so when we're looking at a lot of those different aspects, we're having to like kind of decide like, is this something that needs to be addressed because there's probably fraud that caused it or really just someone overseas. There's a lot in Malaysia right now. Kind of people are hosting things on servers and defrauding a lot of the fintechs.
Yeah, I agree. There is a lot of sort of fraud dynamic that is not the traditional concept of
Mhm.
fraud that I think
Right.
most humans would assume. There's so much fraud happening. Again, to your point, Gayla, just of a lot of it is extra national, sort of. I don't even want to call them companies, but bad actors who are spoofing um, legitimate brands and creating false narratives, which then directly impact those real brands. And so a lot of that brand monitoring and those brand monitoring, brand safety pieces, that fits into the architecture of the compliance web that I spoke of. So we have lots of different third-party tools and technologies, as well as proprietary technologies at CJ that we're constantly, I mean, all of us, I'm sure, have had those types of webs. We're all building and putting together and evolving them over time to protect against those things, because the sophistication of the bad actors is just increasing over time. I mean, just as I talk about all the guardrails sort of lowering to get into the space, unfortunately, part and parcel with that idea is the idea that bad actors are more fluidly also engaging in the space, and causing, to Gayla's point, reputational harm and dynamic challenges for existing brands that have to be defended against. And some of those strategies are, much more far reaching and beyond sort of I think what this conversation contemplates, because it really does involve more your domain, Tricia. It's really the legal application of how to sort of engage, international policing action, because of the dynamic impact, especially to domestic brands.
Yeah, the good news is it's not hard to take them down. The international, they go to Malaysia because they think Malaysia doesn't have the IP that everyone else does. But the lovely thing about something like that is they don't look at what they do have. And so, like, Malaysia is a really fun country right now because people go there, they think they can't get taken down, but it actually can run through the courts there. And if you
Mhm.
win in court, they have to turn over that domain to you, which is lovely. I think that's great. So, yeah, there's all kinds of fun things to do to take things down internationally.
And we are collaborating and coordinating with Malaysia and other Southeast Asian countries to create criminal penalties that are more fluidly escalating than I would have expected. And so although it is easier for bad actors to get into the space, now may not be a good time to do that, because I think some of the
Agreed.
penalties are going to be really serious in that part of the world.
Yeah.
So this is all very complicated and there's a lot to monitor. How do you monitor for all these different compliance issues that you have coming from all different directions?
Well, I guess I'm the monitor. I'll answer first. There's a lot to it, but if you boil it all down, you have policies for whatever products that you're running and also for your brand. So you're going to be running sort of like a multi-point strategy on the internet. And that's sort of like in our world, we have built tools that crawl and scrape the internet differently. And so some of them are really good at finding trademark infringement. Some of them are really good at finding violations on social media. Some of them are good at tracking influencer behavior. There's just like a lot of different tools that go out when they're supposed to go out and pull back information that does not match the policies of either the product or the brand that you're offering. Um, and then from there, we have things that are built to go ahead and like get that stuff remediated pretty quickly on the internet. Um, so yeah, it's building first you have to build your internal policies and then just making sure that whether you're using like a third party or internally, that you use different methods to go out there and look at things because just Googling something isn't all going to work. Just going like to Facebook ad library isn't all going to work, especially with like the cloaking that happens today. So there's a lot of stuff that you have to kind of find in the wild. But just making sure that you're kind of looking at it different ways and not trusting just one thing is the best way we find it.
I wanted to mention kind of one of the other PMA members that's also on the compliance council is Complyly. Uh,
Hmm.
and I got a demo of what all they did, and I loved the fact that they literally would go into individual YouTube videos, transcribe them, and then give you alerts on whatever was getting a little shady there, for FTC compliance. And that was great, because it wasn't that it necessarily crossed the line, but it was getting close. And like some of the folks that I've worked with are, have very large organizations, not necessarily as tight of compliance monitoring as I would like. We're not talking like credit card companies and stuff like that, but other companies that still have financial opportunities, put it that way, and not necessarily tight control on all of their affiliates. And this was a great way to just be able to say, let's see what everybody's up to, who's getting close to crossing the line. Because, we've all seen it. And I appreciate it where there's a lot of influencers that are out there and, they're just so excited and they just can't wait to like share this, and they're going to say this and they're going to say that because oh my gosh, it's so exciting, and a little too close to the FTC guidelines. It's in their enthusiasm, they kind of push the lines. And so that's what I like, is to have tools that are going to be able to go, excuse me, time out. And even for like all those little guys, because like Jessica was saying, she likes the big 50 guys, and quantity I totally respect and honor. Sometimes you get some of the littler guys that are coming along, or they're new or whatever, so that's where I look for those kinds of tools. And I was impressed by that one. So anyway, and they're not the only guys that are out there. They just do what they do very well. Okay, Jeannine's commercial's over, but
So basically tools that everybody needs a little help. This is not just the affiliate manager going out there on their own and like trying to monitor everything. This is utilizing the tools that are out there, because those are the people who know what to look for and they've built those things. So important.
Not unless you have the time to sit and watch every YouTube video, and every interview and every discussion, right, and every podcast. No.
Yeah. I want to ask another. We had a couple of questions we're probably not getting to, but I do want to ask real quick that one of the things that kind of more talking about this bridge with affiliate marketing and the way that we're bringing more of this into affiliate marketing, that FinTech products are being embedded into non-finance areas. So what are those opportunities for affiliates to be that bridge for those embedded integrations?
Well, I know like one of the things that I try and do is provide materials that don't require thinking. Okay, here's the banner ad, put it up, and it's going to point to the right place, and you're not involved. You don't have to mention APRs. You don't have to mention any kind of requirements or offers or deals. Just like, hey, look, this can maybe be good. Check it out, and leave it like that. So that, you're not putting them at much risk. You're definitely protecting the advertiser so that they're not at any risk, because you're not making any promises you can't keep. And that's the big thing. That's always been the kind of the guideline that's in the back of my head, is don't make any promises you can't keep. Send it to the expert, who I consider the advertiser. They'll take it from there, so it's just get them through that first door. So that's what I try and do when I'm working with anything that's broader of an audience, that may not necessarily be only finance, is just try and do that. Because, bottom line, and these words have echoed in my brain for the last dozen years, was an FTC guy who was talking about, he's like, you're dealing with people's money. If they're going to ever come down on you, it's because you're dealing with people's money. They want to make sure that they stay protected. And I totally agree with that. So I use that as my guideline.
And then beyond the compliance piece of that, like it's really an opportunity, I would say, for an out-of-the-box affiliate strategy, right? Some of these embedded experiences. So when I'm thinking about some of our clients, I mean, we work with some large, enterprise brands, and in order to onboard a partnership, like you're mentioning some, payroll providers, or like, ride sharing, when we were talking about that. And those are some big brands to legally connect the dots, right? So we've really leveraged the affiliate rails as like a partnership light strategy. So I think what Jeannine was saying makes a lot of sense. Like, here's like an easy way to get it live, but like what is also easy is, and if you just sign up for an affiliate, we don't have to go through the whole vendor onboarding process. We don't have to get you into Oracle, and we don't have to launch a purchase order, and we don't have to do, it's a pretty seamless way to like baby step your way in. And that way, a large enterprise or a financial brand doesn't need to put product dev resources on something, or, like really waste a lot of time for something that they don't know if it's going to work. They don't know if there's a good audience cross match, but like, let's give it a try. Let's put some affiliate style relationship in place, and go after a whole different captive audience in this closed loop network.
Yep, exactly.
Well, one thing I'm going to have our panelists do is to head over to LinkedIn when you're done here and leave their comments on AI and FinTech, because they have some thoughts as well about everything AI and how that is impacting not just affiliate marketing, but specifically FinTech and affiliate marketing. So thank you so much for everybody that came and watch us today. Thank you to the panelists. Thank you to CJ for sponsoring us. Thanks for the PMA for being able to put on this fantastic kind of content. And we hope to be able to see you all on future webinars.
So much, Tricia. Thank you all, panelists.
Thank you.
Have a great week.
Thank you all.
Thank you.